I think it is time to take a rather defensive stance, and we foresee more volatility in Asian markets ahead, and I think it is too early to really talk about the market bottoming out at this point in time. I think to see a stabilization in markets, we will need to see the pace of spread for the outbreak globally reach some kind of peak and stabilize. And also, I don't think that value has emerged sufficiently for the bargain hunters to come in a big way at this point in time.
How much further do you see in terms of a decline when we generally have a big market event like this, where we are seeing concerns about the global economy going forward? We often see stocks tip into that 20% decline. Do you think that we could be amidst that kind of selling cycle right now? Because a number of these markets already well and truly in correction territory, down 11, 12, 13%.
I think that the bear case scenario, which involves a recession, is clearly in the backdrop, and the odds of that is rising. But our base case is that more likely than not, we'll see a recession being averted and growth coming back on and being recaptured later this year and also in 2020. That being said, we don't rule out the fact that markets can often overshoot. This correction could go deeper than 20%, but we are not looking at a crisis-like correction similar to what we saw during 2008 and 2009.
Oh, okay. Hadley has a question.
Eli, it's Hadley out in Abu Dhabi. I mean, I want to build on that, though, because what we just heard from Dan Jurgen talking about oil markets, talking about the potential fallout here for the U.S. presidential election in November. We're talking about an economic crisis in the United States, potentially. We're also now talking about a health crisis that's ongoing. When we think about this a bit more broadly, in terms of the stabilization, it seems as if China's not going to be leading the story in the coming months. It's actually going to be the U.S. reaction to that. How do you see it playing out?
I think the markets are watching very closely for more fiscal measures and also healthcare measures coming out from the United States, which is the world's largest economy. And so far, what we've seen from the government in the US hasn't been very reassuring. Now, let's not forget that a sharp move in oil tends to be a positive factor for EM Asia over the longer run. But to do well over the long run, you have to first survive in the short run. And the oil and gas sector is a critical sector for global credit markets, particularly for US high yield. That's going to pile on even more pressure there as well. And this is a time where governments need as much fiscal revenue as they can to put forth easing to counteract the effects of the virus. And the lower oil revenues for many of these oil exporting countries is not going to help in this backdrop.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.